Warren Buffett, the legendary billionaire investor, has long been recognized for his reputation as a steadfast buy-and-hold investor. However, now he has caused a stir in the financial markets by making significant changes to his investment portfolio, leaving many investors feeling in question about the future of the stock market in 2023. As one of the most respected figures in the investing world, Buffett's actions have garnered significant attention, and the latest moves of Berkshire Hathaway do come as a big surprise. In an astonishing move, Buffett's holding company, Berkshire Hathaway, almost completely divested its billion-dollar stake in the chip giant Taiwan Semiconductor manufacturing company, TSMC, just a few months after acquiring it. Meanwhile, Buffett increased his stake in Apple to almost 6%, highlighting his bullish outlook on the tech giant's future prospects. Buffett's decision to liquidate his TSMC holdings comes as a shock to many, given his long-standing reputation as a patient, long-term investor. According to the most recent disclosure to the Stock Exchange Supervisory Authority, SEC, on February 14th, Buffett's holding company, Berkshire Hathaway, reduced its stake in TSMC by 86% in the past quarter. Just the previous quarter, Buffett had acquired the shares, which were the 10th largest position in his portfolio. This means he is only holding 14% of his initial purchase anymore. TSMC revised its investment target for 2022, slashing it by about 10% to approximately $36 billion. The move came in response to new restrictions imposed by the Biden administration on China's access to vital technologies, which has significantly impacted the company's long-term growth prospects. The chip industry as a whole has been grappling with several challenges in recent times, including supply chain disruptions caused by the pandemic and a demand slowdown due to rising inflation. Warren Buffett didn't just shake up his investment in Taiwan Semiconductor manufacturing company, TSMC, but also made other major changes to his $300 billion portfolio in the fourth quarter. For instance, he sold 91.4% of his shares in U.S. Bancorp, a bank that had lost more than 20% of its value last year. He also cut his stake in BNY Mellon, a financial services provider, by about 60%, as it had suffered a similar fate. The reductions in both cases amounted to almost $5.5 billion each at current market prices. Additionally, Buffett trimmed his investment in Activision Blizzard by 12% to $4 billion. He had hoped to profit from Microsoft's acquisition of the video game company through arbitrage, but antitrust regulators are currently blocking the deal. These moves show how Buffett isn't afraid to adjust his portfolio as circumstances change, even if it means parting ways with companies he's invested in for a long time. It's a reminder that successful investing is about adapting to market conditions and seizing opportunities when they arise. These are his current top 10 holdings. Apple was one of the few stocks Berkshire purchased in the most recent quarter. Buffett likely views Apple more as a consumer products company than a technology company. According to the filings, Berkshire added 20.8 million additional Apple shares worth $3.2 billion, bringing its position to 5.8% and close to 39% of the total Berkshire holdings. Behind Apple, the top holdings are Bank of America, Chevron, and Coca-Cola. Together with American Express in fifth place, these holdings account for around 3/4 of Buffett's portfolio. Even though Berkshire Hathaway has reduced its top financial holdings, Charlie Munger, the 99-year-old vice chairman of Berkshire Hathaway and a devoted friend and business partner of Warren Buffett, said he still supports many large bank stocks. Munger, a vocal opponent of Bitcoin and other cryptocurrencies, also continued his criticism of digital assets by repeatedly using the word crypto as a swear word. "I think people who oppose my position are idiots," he stated, adding that investors should stay clear of people who promote cryptocurrencies, outlining that cryptocurrencies are crazy and worthless. Let us know what you think about Berkshire's latest moves in the comments down below. Thanks for watching. Like and subscribe.